So I'm just going to talk about three things briefly, and really this is all preliminary stuff that's subject to change, but everything I'm discussing is going to be related to what you need to do or what successful agents should be doing now. Um, you know, fourth quarter is all about selling, but if you can prepare yourself ahead of time, I am going to show you a couple of things that I've done in the past, some new changes, and then some uh, ending suggestions. So the first thing for ACA, the biggest change is the new compliance stuff. So the mostly Florida agents have ruined the marketplace because of fraud, waste, abuse for the rest of us. Uh, they've tried to do the two-factor authentication. They tried to do the consent. They tried to do the three-way calls. It's so rampant in these Florida agents. I hate to pick on Florida, but it's probably where 85% of them are. Uh, they have forced CMS to restrict the rules further. So starting in October, possibly sooner, you are going to, each agent is going to have to get consent with a text code on their phone before you're allowed to do anything, before you're allowed to do any plan changes, um, uh, be added as their agent of record, or essentially just help them at all. If you are already the agent for a client and you're listed as whether it's a state-based or a NPN through the through healthcare.gov, you will remain the broker as long as they don't remove you. You still need to get consent every year, uh, once a year, so that you could remain as the authorized agent and then be able to help people, whether it's access their account, submit a new plan, submit an application. If you are not currently the agent for a client, and you should be, now is the time to get ahead of that. So what you should be doing is in HealthSherpa, I would go in there. You can request a authorization form now, and you can ask people to verify their identity. Once their identity is verified in HealthSherpa, which a lot of you agents know, it's been a pain in the ass because people are getting flagged as suspicious with their correct information. So a little bit of background. The reason the identity proofing was started was going back to the cut down on fraud. What happened was because agents were submitting false information on real people, the actual data for a lot of uh, clients, individuals, even some agents is wrong. So people are asking questions or answering questions about, in 2010, you requested a home loan mortgage. Who's the bank? And they might put, Bank of America or whatever. That might be the correct answer, but the data is so compromised that a lot of times it's saying you need to now call Experian and verify your identity because we have conflicting information on here. So that is the good news is with the identity verification, once your identity is approved once in HealthSherpa, you're done for like forever. So I would highly recommend going in your HealthSherpa account, your current client, book of business, and it will show you who has an active identity verification policy, who you are the broker for, and then who you either may not be the broker for, people that you may be losing as the agent of record. Um, I will send a follow-up email to this with further instructions once I get clarity and maybe some, quick videos on how to do this. But essentially, know that a lot's changing. You can no longer, so in starting October, you can no longer call the marketplace with your client and enroll them or make a plan change. The client will have to do that on their own without an agent on the phone. Even if you are their existing agent of record, they cannot submit an application with you on the phone to the marketplace. So essentially, what CMS is trying to highlight is agents must get that uh, text message authorization before they can actually submit an application. Once you have that authorization pin and it's verified, you can then go into either HealthSherpa or Lucy's, it's a different one, or the marketplace directly and help them. But until you get that code, you cannot uh, you cannot help them, and you'll not get paid unless you're on the agent of record already. But the marketplace, the call center that everyone's been relying on, will no longer be able to update you as the agent or submit a new application with the agent on the phone. So essentially, the call center is going to be very worthless, and it's going to be mostly for telling your clients to call to either update their information or just verify that you are the agent. But they can't make an agent change. They have to do that through the PIN. There'll be more information about this, but those are the major changes. Um, next slide, if you can. I'm going to keep going fast, but I'll leave some time at the end for questions. So here is like what the steps are. So I know it's kind of tiny, but the screenshots are the client. The first screenshot is the client trying to verify their identity in HealthSherpa. That's what it looks like. If they cannot verify their identity, that's when they're going to have to call Experian with a code that they'll get on the HealthSherpa screen. They will have to update their identity one time. Once it's approved, it'll go to the next step. The next step, you can see that little tiny screen. It's just verifying your information, your name, birthday, phone number. If they enter any of the information and it's either misspelled or they add a middle name as part of their first name or last name, it'll get kicked back. So just make sure that people are, entering their name as it is on their license and not what it is. Again, the middle name is a big one. So, and then last is that last screen, verify your identity with Experian. That's what's going to happen to your client when they cannot get their identity verified already. It's going to prompt you for them to call this phone number, give them their PIN, and then they're going to ask a few questions and then hopefully get verified. Next slide. Back to what I already kind of mentioned, there's no more call center enrollments, so no more three-way calling. Now is the time you can email blast in HealthSherpa to have your clients verify you as their agent. Once they verify your PIN, you do not need to do that for another year. So if you can submit or send as many emails or phone calls, however you contact your clients, try and get as many as you can as verified and with your authorization. Once you have that, you'll be able to write a lot more policies. If you're going to spend open enrollment needing to verify people's identity, get authorization for them to give you the PIN to authorize you as the agent, you're going to lose a ton of money. I mean, open enrollment's about maximizing your time, and waiting to open enrollment to start doing these things, it's a death sentence. You're going to make things harder on yourself. It's going to be too hard. People are idiots. No one can just do one thing anymore. You ask for a text message after 15 minutes. If they don't give it to you, it restarts. After 3 times, if you ask for the PIN 3 times, they don't give it to you, within 24 hours, they are locked from changing their authorization to anybody for another 48 hours, I believe. So once you get that done, you can pretty much get back to your prior authorization rules that are currently available, but it's just one extra step. I think long term, it's going to be a better solution for agents. I think this first year is going to be, a lot of, it's going to be a mess. I mean, I really don't see how, if you have like a couple hundred clients, how you can feasibly get all of them to give you a PIN to authorize you before you even have a phone call. So I would say your best clients or the clients you never talk to, now's a good time to reach out to them, tell them open enrollment is coming, mention that you would love to continue being their agent. There's some new fraud protections, and they're going to need to give you authorization with a text message or a email to continue working with you. To just tell them that if they want to work with you, they need this done ahead of time, and then they can schedule a call for open enrollment. Otherwise, people are going to wait till last minute, like everyone always does, and you're going to spend, half your time trying to get delegated to actually like do your job, which is again, unfortunately, just the place we're at right now. Consent still required, so the PIN is not a replacement for consent. It's just the next step. So as long as you have a consent on file, that'll be fine for the year. But I think the PIN confirmation is going to make that easier to continue with the consents, and it's going to make it a little easier, I think. Next slide. Okay, here's before I get into the more of the marketplace updates, I wanted to go over the 3 opportunities you can hammer on now. So the subsidy expansions, unless there's some miracle, are not going to be passed this year. They may be passed in 2028, but as far as I know, from every lobbyist, brokerage, all my network contacts, there's no pallet for it. There's no bills that are going to be passed. There's no funding. So barring some miracle, I don't see anything like that happening this year. So with that said, the subsidy calculations are not changing. So a lot of people are not going to be eligible for a subsidy. Again, if you're currently eligible for a subsidy and your income's not changing, it'll essentially remain similar or exactly what they're paying now. For people who want a cheaper plan or a better plan or a more network, there's 3 options, and these are not the only options. I'm just highlighting 3 of the top products from each category. The first category is short-term medical. There are 18 states that you can sell the 3-year plans for, and I'll get to that in a minute. For the non-short-term states, Illinois, California, Colorado, and others, the Health Protector Guard from United is a indemnity plan. It still uses their largest Choice Plus PPO network. There's no deductible. It is an indemnity plan, so you can't market it as a ACA compatible or compliant plan. There is risk to it that if you have a really bad year or you're in the hospital for a long period of time, you could hit your cap. And the last one is the private PPO market, which is like absolutely on fire. So I'm vetting a couple other products right now for the individual private PPOs, but these products are, if you don't qualify for a subsidy, if you are a high net individual, if you have a family and want to have access to doctors in all 50 states with a nationwide PPO, those are great candidates to enroll in a long-term individual private PPO plan. It's level commissions. The minimum commission is 4% of the premium on the medical, and goes up from there. Like I said, the commissions are level. Once they're approved, they're not guaranteed to be enrolled forever, but each year they will have the opportunity to either make a plan change, accept the renewal contract, or just decline altogether. So there still is a email that will be sent out after the first year, and all they do is verify that they want to continue the plan or accept the rate increase. But in the last 24 to 30 months, I've written more private PPO plans than ACA, and even like short-term. Those are going to stay in the books. So those policies I wrote last year, I'm getting great feedback. They pay claims. They are traditional copay plans, which is the most popular ones people are enrolling in. So they get copays for essentially everything. doctors, specialists, prescriptions. Specialty drugs are not covered. So one of the biggest questions is like the GLP-1s. They're 100% excluded. They are eligible for the manufacturer discount, but if someone's trying to move to a private PPO plan or even a short-term plan, it's just know that they're going to have to pay out of pocket. So that should not be like the lead candidate for these plans. You know, with Medicare, you can get the GLP-1s for $50 a month. I know in the private market, I've seen discounts, you know, in the 150 a month range and higher. So it's not a fit if you're trying to just get Ozempic or Zepbound or Wegovy covered, because it's just, they'll be approved, but it won't be covered. They'll be eligible for the discount. All right, next slide. All right, so short-term medical, basically they're all similar commissions. They all range from 17 to 25%. The golden rule, the tri-term, if you're in a state such as Florida that offers the 3-year tri-term, it is a great product. You get 3 consecutive 36 months of guaranteed coverage. Once you pass underwriting the first time, you are automatically eligible to continue for up to 36 months. They use the largest Choice Plus PPO network for United Healthcare, which is the same one they use on their large groups. It's hard to find a doctor or hospital that doesn't take it, that takes major insurance. So that's an issue. And then most times you can get an approval in the same day or next day with as early of start date as the day after you apply. The middle tier, the Health Protector Card. So I'm just highlighting. I hate United Healthcare as a company. For anyone who knows me, they're just not my favorite, but they're a big part of the marketplace for short-term individual and these Health Protector Cards and group and Medicare. So you can't just ignore them, especially when they have good products. So the Health Protector Card, it's comparable to a short-term plan. The way I explain it to people is this is a indemnity policy. Indemnity means there's no deductible. So day one, any medical claim that you have that's approved, no cosmetic surgeries or anything like that, you will get a benefit. So instead of a copay, like a short-term plan or ACA plan or a private medical plan might have, they will pay you a fixed amount for a like doctor's visit, for example. So on one of the more popular plans, they will pay or reimburse you. You can think of it like that, $150 per office visit. Many times, with or without the discount, the network discount, a visit might be $70, it might be $45, it might be $100. If it's less than $150, the client, the policyholder, keeps the difference. So if the doctor bills $120, the plan reimburses $150. They can actually keep the $30 difference. Sounds great, right? You should never be promoting that. If people are buying this plan to, make money, that's not the point of it or the highlight. But it is something that is pretty common, and people call me all the time saying, "I don't know if this is right. I got a reimbursement check for $200. The bill was only, $70. What do I do?" And when you tell them they can, cash it, keep the difference, they're ecstatic, and makes you look like a good agent. And the last one, the Patriot medical plans, specifically the Cigna network, they call it the PW Ultra, I believe. And there's 4 options. Next slide. Next slide. Go back to that. Next. No, sorry. I keep going down. Next. Okay. So I'm just going to highlight the Patriot medical plans. The short term and the HPG might be more self-explanatory, but if there's time, I can go over those as well. But like I said before, who's it a good fit for? So if you're a 25-year-old that was making $25,000 last year, and now you've got a promotion or a better job, you no longer qualify for a subsidy, and they're employer does not offer insurance, the Patriot Medical Plan is going to be a great option, based on the pricing and their needs. Uh, Again, commission's 4% of the premium. You know, it's not product should not be sold. Any product should not be sold based on how much money you're making, but it obviously helps. Um, the core enroll is the platform that the Patriot Medical Plans are on. It is a pretty slick platform for all of those agents that already have it. You can quote the plans. You can send quotes to your clients. It'll let them view the quote, apply, and enroll all on their own. So what I'm doing is going through my book of business, looking at who has, high, $2,000 or more premium on an ACA plan. I'm going to them and saying, hey, would you be open to reviewing some off marketplace options that are going to have, larger networks, lower copays, and see if it's a fit. I mean, most of the time, unless they're just absolutely, you know, busy or uninterested in changing what they have, most of the clients will say, yes, show me what the difference is. The more clients of yours or prospects that you can submit now, the better. Those are going to stay in your books. They're going to start paying you before open enrollment. And most importantly, you're going to be able to get them taken care of before the fourth quarter. So for anyone who is, this is a good fit for, whether it's a short term or a private plan, like now is the best time to just reach out and say, hey, would you be interested in the product that, might be cheaper, likely has a better network, likely lower copays? Now's the time. The feedback I'm getting has been fantastic. Barely any complaints. I've had maybe one or two claims not being approved like they should, but after an appeal or a phone call, they haven't given a difficult time. So that's important. I've had this product now for over 3 years, and it's running pretty well. The only thing I don't like about it is they sometimes will update the product and give you, 90 days and not a ton of time to explain what the rate increases may or may not be. But for the last 3 years, it's been under 10% increase for these plans, each year, which is a pretty standard medical inflation rate. All right, I just went really fast, so I'm just going to pause there for a second and see if anyone had a question or if there's anything anyone wants to clarified or explained further, or had a question about anything else besides what I've been mentioning today.
I have a question, and it goes referring back to the HealthSherpa. You mentioned that there is a bulk email that can be sent out. Is that bulk email just more or less an intake form that you just write your own email in regards to the new changes and what needs to be done? Or are they going to do a formatted email just to send out so you don't have to write your own?
Yeah, good question, Maria. So we're going to have a HealthSherpa webinar where they'll explain that all. But yes, there's going to be a template in HealthSherpa, which I'd recommend using since it's already going to be tracked there. It will have the suggested language on it, and you can change it to a certain extent. And it'll explain to the client why you're doing it and what you're doing. So yeah, it'll be in HealthSherpa. That reminded me of another feature. So currently, if you use HealthSherpa, most people use HealthSherpa, but there's about 7 or 8 different platforms, EDA platforms out there. Right now, and in the past, they've always been agnostic, meaning you could use HealthSherpa for one client, and you could use Lucy for another, INX Cloud, and you could use eHealth for a third. Going forward, once they make these changes in October, you can only have a client in one of those platforms. If you enroll them in HealthSherpa and they were on like one of the INX Cloud or another platform, going forward, you have to get that information from that platform. It's no longer going to be accessible to multiple platforms. And again, this is to combat fraud, so that agents from one agency are not enrolling people on a platform that doesn't have the visuals of the current agent or the client knowing that more than one agent's accessing their policy. But good question. Any others? I'm just gonna I guess stop there. I'll send some updates and these slides with some videos and screenshots that make more sense on the HPG and the short term. Are the states listed on here somewhere for the short term? The 18, okay, so here's the states where the tri-term is still available. Essentially, Florida and Indiana are awesome states. Specifically, Indiana, huge opportunity. CareSource is leaving, and Cigna's leaving the market in Indiana, so it's going to be left with Ambetter, Anthem, but only in a few counties, and I believe that's it. I might be missing one other because I believe SumaCare is not there. It might be one county. So a state like Indiana, if someone has CareSource or Cigna, offering them a tri-term or essentially any other option is going to be huge. If you can get someone on a plan now and enroll them and they're happy and they could start sending referrals or telling their network that you got them this plan, and you don't have to stress about their CareSource plan being discontinued, like definitely do it. Indiana's an underserved market, just like Iowa. Florida's obviously crowded, but the tri-term product versus the other short-term products in Florida just suck. So it's such a significantly better product. People like it, and the rates are pretty competitive in Florida. So yeah. And then Stephanie, there's one more slide that has some of the carrier logos on it for ACA. Maybe I edit late. Let me see if I can grab it here.
Is it Cigna's leaving the marketplace, right?
Yes, every state they're leaving. CareSource is leaving Indiana, Ohio, West Virginia. Essentially, CareSource is leaving every state except Wisconsin, Nevada, and Georgia. So essentially, they're staying in Wisconsin is really the only state that they're going to be really competitive in and offer decent coverage. They got absolutely annihilated on claims this year, and they are just too scared to expose themselves in multiple states more than those three. So again, another opportunity and a reason to have that conversation with clients about, hey, let's take a look at your benefits and see if I can find you a better plan before open enrollment and get you taken care of and enjoy your holidays without the health insurance plan selection stress. Let's see. Oh, here it is. So the other ACA updates that I think are going to be worth looking at is Antidote, which is currently in Arizona and Ohio. They're expanding to Texas and Georgia. Like Texas is my biggest state. So with Cigna leaving and Aetna leaving last year, highly recommend getting contracted with Antidote in both those markets. If you are in Arizona and Ohio, definitely get contracted in every state there. There's a newer carrier, or I guess a new carrier called Harbor Health, expanding to Texas. I'm sorry, they're entering Texas, only in Texas, and they're going to be clinic acre plans. So they're going to have plans with facilities that are going to be Harbor Health facilities in Austin, Dallas, El Paso, San Antonio. So all the metro, bigger city areas. We don't know what pricing is going to look like, but I've been told from the Antidote management and their underwriters that they're coming out with aggressive pricing. To me, means they're going to be, undercutting as many carriers as possible just to grow. And Harbor Health, I'm not sure yet. So, but get contracted now because those contracts, I'm guessing they're going to hit capacity, and then they're going to cut off contracting for new agents or agents that are just independent that don't have an upline. that has any relationship with them. So if you need one of those, or want to just look at what you have with us or with ACA, Medicare, just email contracting@ihealthagents.com, and we'll tell you what you have and don't have, and any suggestions that you might be missing that you don't currently have. And also on the private PPO, so like they are capped on those contracts. We still have a block of contracts for our agents we can use. So essentially, don't wait on that. I think we have about 9 left. Just email contracting@ihealthagents.com and request that you want the Patriot private PPO contract request. All right, I'm just going to pause there. I mean, we got a few minutes left. I'll leave the rest of the time for some Q&A. For anyone that wants these slides, we'll send it out after the call, and then we'll be sending some follow-up emails out. But if there's any takeaways, if you're doing ACA business, get all your clients authorized as soon as you can. Use that conversation or reach out or email blast to just ask clients if you can review their plans and check in. So don't just say, give me this code and go away. Try and close as many clients as you can. Use an opportunity to upsell. Do you have vision? Do you have dental? Do you need anything? Do you have any need for like a hospital indemnity plan because your deductible is really high and you don't have any coverage on that first dollar amount before the deductible? So all good reasons to reach out to clients. In my experience, doing it now shows your clients you care, you're proactive, and successful agents do things with their time, and now's the time to just take this opportunity to see if there's clients you can move over before the fourth quarter and spend that time with ACA policies, Medicare, et cetera.